All right. And with that, let's move on to our first corporate conversation on the show. And we're talking about the stars of 2024, some of the stocks in the sectors that have done really well. And one such space, obviously, is real estate. The cycle continues to be in an upswing. So what does the new year have in store? We have Mr. Ashok Tyagi joining in, Managing Director of DLF. Mr. Tyagi, thank you for being with us on Seasons. Greetings to you, sir. So the year was spent in recounting how many new launches you had and how they got sold in 2 days or 3 days or, maybe a couple of hours. And these were some very, very, high-priced, high-end luxury launches. That was the story of 24. Let me start with a broader view as we get into 25. How many years are we in the real estate upcycle already? Do you see the kind of buoyancy and appetite for high-end luxury housing continuing in 25 as well?
So good morning, Surabhi. Honestly, I am not a fortune teller, I think your question is unfair because when we were in a 7 or 8 years down cycle, nobody asked how long would the down cycle continue. So I think we are enjoying the ride. I think the entire industry, at least the organized industry, is enjoying the ride. I mean, I know it's been about 3 years since the current upcycle sort of, strengthened, and it's kept on strengthening year on year. In all fairness, if you look at it in a slightly more, I'd say, scientific manner, and I'm not an economist, I think most of the macros continue to point to this sustained growth on the real estate cycle, at least on the premium and the luxury segments. We don't deal in affordable, in all fairness, unfortunately, everything is affordable, but we don't deal in the lower end of the housing market. And I'm assuming that there is some degree of stress that's coming there for the last 4 quarters or so. But the premium and luxury segments continue to strengthen, not only in NCR, but in Mumbai and all of the urban locations that we operate in or we observe.
No, Mr. Tyagi, I wasn't asking you to wear an economist's hat at all. I was simply asking you that, I think one of the first signs that we see when there is, and it's a cycle, it happens every time, that there might be, some exuberance building in is when it's not end user demand entirely. A lot of it starts becoming investor demand. How much of that have you seen already? Let's talk about the last quarter itself. How much would you say is end user? How much is an element of investor/NRI demand coming through?
Okay. So, we've made it public that our NRI demand is in the range of 25%, 27% for all new launches. Almost a quarter of our sales are to the NRI segment, and this is spread across from Singapore to Dubai, London, US. Now, as far as your issue is concerned of investor versus end user, honestly, anybody who's buying a 8 or a 10 crore house most probably already has a dwelling unit which he owns, and whether he'll move in here or not, I think that obviously only post-completion that choice will be made. What we have done is that we have done basic controls. We have hiked up our initial deposit, which we take in the matter when we have somebody book a house for us, to 50 lakh rupees against the normal of 10 or 15 lakh rupees to ensure that the froth gets filtered out. In fact, for Dahlias, the booking amount is 2.5 crore rupees. So I think clearly we have tried to ensure that only serious players are coming in. Okay. The stuff that we have sold in the last 2.5 years, we have so far seen only a very small, I'd say, request for retrades or buybacks, which means that the investors or the people who have bought it are clearly holding on to their purchases. But again, post-completion, I'm sure many of them will shift into these houses from their existing houses because of just the better quality of life. But I think that's something which will have to be observed. What we are not seeing, just for the record, is those early 2010s frothy times when people used to buy and trade in 6 months.
And flip.
Point taken. Mr. Tyagi, good morning and thank you very much for joining us. A pleasure having you with us. Wanted to understand, your percentage of luxury homes has gone up. I think it's gone up for the industry itself, but yours has gone up from, say, 3% in 2021 to 6% in 22 to 9% in 23. Will that be the trend going forward as well? More in luxury? And does that mean higher margins as well for the company?
Yes. So Latha, honestly, I don't necessarily recognize those percentages that you mentioned, but clearly our focus is, at least in Gurgaon, the properties that we are selling are mostly in the 7 crore plus range. So Privana is about 7 odd crores. Dahlias obviously is in a different price segment since it's super luxury. Our properties in the Chandigarh ecosystem in the Tri-City are in the range of between 2.5 to 3.5 to 4 crores. Once we come in Mumbai, I think by Mumbai standard, it will be a relatively premium housing and not luxury, because I think the price point should be in the 5 to 8 crore category. So I think that's the price points we are operating in. So I mean, if you take luxury as say 5 crores plus, I think most of our sales are in the luxury segment.
Okay. So if I can persist a bit, what
sure.
do you think you will do in terms of acquiring land bank, in terms of development of the land, in terms of revenue, in terms of margin? Just a ballpark, if you can tell us how the coming year will look.
Of course. So, ma'am, if you see, in fact, what we've also stated in our analyst reports, that our target is to eventually hit a gross margin of in the range of 45 to 50%. We are currently hovering at the 37 to 40% mark. And as more and more luxury product offerings come to the market, I think we should start hitting our target margins. From a launch standpoint, I think clearly we are continue to look at focusing in Gurgaon, including the Dahlias, which will continue to sell through the year. There'll be new phases of Privana and maybe one more project in Gurgaon. We will have the project in Mumbai. Possibly the launch in Goa should also happen sometime during the calendar 25. So I think really we continue to focus on this segment, Latha.
Okay. And if you can give us some numbers, what are you concentrating? I mean, what are you giving yourselves as targets?
Okay,
for margins, revenues?
Yeah, so the pre-sales guidance that we had guided for the fiscal 25 was, I think, about 16 to 17,000 crores, which hopefully we've done about 7,000 crores in the first half. I mean, obviously, since our results are out 3 weeks from now, I would not comment on specific numbers, Latha. But I think we look very comfortable to meeting.
Not for tomorrow. I meant
for the fiscal 24-25. I'm saying, so we are saying for the fiscal 24-25, we had given a guidance of 16 to 17,000 crores, and I think we look comfortably placed to meet and hopefully slightly exceed that. I mean, obviously, the guidance for the next year should be a clip up on this, but I think the specific number we'll typically announce after the end of Q4, and I think we'll just stick to that piece. Our margins on new sales continue to be in the 40% plus range, and as Dahlias enters, I think this should start inching towards the late 40s mark.
So do you see climate becoming a kind of a wet blanket? I mean, visibility even in a city like Bombay, where you have a sea breeze, has dropped to zilch. And a lot of that is, at least the finger pointing, is towards the very high construction level in the city. I mean, worker participation also will fall, right, in a city like Delhi as well. Do you see that becoming a reason why you will not be able to have higher and higher construction, execution and sales targets?
So there are 2 points to this, Latha. One, clearly, I think now if you look at the last 3 to 4 years at least, because of the NGT ban that comes in the winter months on account of the high pollution and the air quality, I mean, I'd say that we are effectively constructing between 10.5 to 11 months in a year against 12. That I think is a given, in that sense. And I think in all of our construction estimates, most responsible players are factoring in. So I mean, shutdown, a loss of 15 to 30 days in this November-December time frame is unfortunate, but I think that's just the price that you have to pay for unfortunately the air quality that is there. What you raise a slightly deeper question also on execution. And I think the execution bandwidth of the contracting ecosystem continues to be a matter of concern, especially as the overall execution throughput on both the infrastructure and real estate continues to grow. And I think that's where something, frankly, I think most players would be concerned about as to, yes, the market can possibly absorb more, but can we responsibly execute more?
Okay. Finally, sir, leave us with a sort of a trend on pricing as well. How has it been in the third quarter, and what do you expect again in the coming months in 2025?
So I think, clearly, I'd say if you look at the 21 to 24 time frame, at least the NCR real estate was coming off a long lull. So I think there was like a rebound pricing that took place. I think the price growth will continue. Maybe the pace of growth will begin slightly moderating, in all fairness, but I don't see that, because I also track the secondary sales, which is a far more secular sort of a thing, metric. And there also, in the secondary sale, the markets continue to strengthen, the prices continue to strengthen, but maybe at some stage, the price growth will begin moderating slightly. But I don't think that that's a concern for, a cause for immediate concern. Also, in the super luxury segment, I think it's also a question, because the clientele buying that, is not necessarily that much concerned about price, but about facilities, location, the address. So I think there the dynamics actually are different than what they are for the bulk of the market.
Absolutely. So pricing continues to be firm as of now, and the outlook looks promising. Thank you very much for joining in, Mr. Tyagi. Wish you a very happy New Year to you and to your entire team at DLF. Thanks for being with us, and hope you have a fantastic New Year's holiday as well.
Thank you, ma'am, and very happy New Year to you as well. Thank you.
Thank you. Thank you, sir.
Thank you, Mr. Tyagi.